Good afternoon, everybody. Andy here, tradingadventures.com. Let's take a look through the charts and see what's going on in the price action across many different markets and sectors and try to put the picture together here. So starting with SPY, still below a declining 8-day moving average. For now, still above this anchor. Get my head out of the way down here. Still off above this anchor from the August 25 low, but just continuing to drift lower. Before I switch to the others, let's just set the stage here a little cleaner. Here's the roadmap chart, 30-minute time frames on the four major indices, and the market's just really going nowhere. We can take this out. I've been sharing this one a bit lately to expand the time frame a bit. 130-minute candles here, drifting lower, declining 5-day moving averages, no resolution to the decline, and continues to probe new lows. Nasdaq couldn't make a new high here, and then it made this and couldn't make a new high there. And so we're just, we don't have any resolution yet. This is not going anywhere good for long-oriented traders, and it continues to show vulnerabilities. We'll get to a couple of what I think are key examples of that here in a few minutes. But before we do, let's go back through the rest of them on a daily time frame. Nasdaq flat with a wide range here for about a month now. A little over a month. It's been stuck in this area, and this is another picture of what I just showed you. The same information, made a run up here to this area, couldn't get above it. Now we're still stuck below this anchor off of the November lows. And here's the one from the August lows again. So not great action there on the Nasdaq 100, even though it is back over for the time being a 5-day moving average. It is declining slightly here throughout this morning and this afternoon. We talked in recent months about DIA and IWM being the leaders. They were holding up well, even while the Mag 7, even while the large caps and mega cap tech was struggling a bit. We had some leadership. That is no longer the case for many weeks now, as we had kind of a failed breakout here on the Dow 30 that is now down and testing this anchor from back here, and the 200-day is rising below. It's below all but the 200-day moving average, and UM very similar. Made this peak up here in mid to late January, and now just struggling to gain any kind of traction to the upside. And for a little bit of context here, let's just look and see from that high down to yesterday or Monday's low. 9.1, no, sorry, let me do that again. Get the right spot on the chart. That was right at the 10% mark. So just barely tickling what people like to call a correction on the small caps. But if we go back to SPY, and this is not closing prices, this is just intraday highs from this level here down to Monday's low. It's only 5%. It feels really bad, but it's only a 5% decline from its peak to its low right now on the recent action in SPY. So the all-cap world index X the US, we saw a lot of buying in the weekly chart analyses. In particular, I've highlighted this chart, and we've seen a lot of buying in the overseas markets. Now my chart has caught up there now. That obviously changed with the news of the last couple of weeks, and X now below all of its moving averages except for the 200-day, which is way down here. China still struggling. It's below all the moving averages with the 200-day average way up here. And then another area that we were looking to for emerging strength, if you will, or leadership, were bonds. A month ago, bonds were starting to behave and looking much better. They've given back that whole move from here up to this peak, all the way back down now, and testing the 200-day moving average there on the TLT, and similar action on, that was AGG, similar action on TLT from this low. Really stellar run that has given all of that action back now. And we've got a little bit of a reference point here. I can extend that over. Not very clean, but we can see that even bonds are not providing or emerging as leadership like we thought they might about a month ago or about 2 weeks ago. High yield bonds still trading like stocks, which is, that's what they're supposed to do. It's a higher risk asset class in the fixed income world, and it trades more like stocks, but they've been declining as well, even as they held up for better than stocks for quite a while, back towards the last day of February. And so far, or excuse me, that's the first day of March. And so far for the last couple of weeks, they're struggling here below all the moving averages. So you see the recurring theme there. Lots of pressure in the stock indices and fixed income asset classes. Crude oil, just really a historical run up here. This was a move from, let's take this breakout low here, or excuse me, high here, and look at what happened with crude. Up 80% in 6 trading sessions. That is not normal. That's not the kind of thing that we see very often in crude oil. And that's not even from the lows. That's just from this breakout here. So a bit concerning there with the action in crude oil. Gold still hanging around, riding the 21-day moving average higher, consolidating this recent move here. Still looks pretty strong. That's a safety asset, of course, and silver doing much the same with the moving averages in a little different spot there. So now if we go down to some of the individual sectors or industry groups, semiconductors went down like the rest of the market, and they've come back maybe a little further, but still struggling with and fighting this rising 50-day moving average here. This is the year-to-date anchored VWAP here that's kind of keeping a lid on things with the help of the 50-day for the last days or so, and plenty of work to be done there if the semiconductor index is going to get better. Biotechs, however, still consolidating. Sideways move. Notice the Bollinger Bands are flat. They're pretty tight. It's continued to find repeated support from this anchor here, the orange line. And so that's one small area of strength and potential leadership there in the stock indices or sector groups. And software, which mounted a very strong bounce. If you recall that bounce scenario outlined in the weekly charts a couple of weeks ago, worked out very well, but finding trouble here from this anchor off the all-time highs and consolidating here for the last couple of days, and it looks susceptible to further downside if it were to happen to lose the year-to-date anchor and the anchor off of this high up here. So that's what's going on in software. Mag 7, finally, we'll see that it's just not the biggest companies in the S&P 500 or the Nasdaq 100 are not showing leadership. They are finding support off of this orange anchored VWAP, but all the moving averages, with the exception of the 50-day, are coming together right here. This is a bearish consolidation pattern in an intermediate downtrend on the Mag 7. So it's a choppy, volatile environment almost everywhere you look. It's not the right environment to press hard or to really push swing trades. It's finding lots of breakout failures, breakdown failures, lots of reversion to the short and intermediate term moving averages, and not a lot of continual direction one way or another within the context of a market that's drifting lower. So, and that's really all there is to say. It'll change at some resolution to the actions in the Middle East would certainly help that. Maybe we get that sometime, but that's who knows if and when, how soon that may come. And, we're through earnings season for the most part. There's not a whole lot else going on here into the rest of March from an economic standpoint, other than the usual announcements of inflation and employment data and Fed speakers and all that kind of stuff. So not a lot there to shake things up. The geopolitical news is dominating the storyline, and the price action is constricting and moving lower as a result. So just take it slow, be patient. The conditions will change. They will become more conducive to more active trading. But for now, take it slow, be patient, manage your risk, and keep your money safe.